Hello, brothers and sisters. A warm welcome to Investigate. I am Avatar Lahiru, your guide in this series. Nice to see you again. Today, we explore part 1 of our second substantive topic under Chapter 2, which is on financial institutions. When most people think of financial institutions, the first image that comes to mind is a bank. But banks are only one part of a much larger system. So, what are financial institutions? Financial institutions are the whole network of organizations that safeguard our money, provide loans, move payments, and ensure the economy runs smoothly every day. In Sri Lanka, these institutions can be divided into two broad groups: those regulated directly by the Central Bank of Sri Lanka and those outside its regulation. In this first part, we'll look at the central bank itself and the wide range of institutions it supervises, known as Authorised Financial Institutions. The central bank is the cornerstone of a country's financial system. It manages the currency, controls the money supply, and sets interest rates. It also oversees the network of financial institutions that keep money flowing smoothly through the economy. The central bank operates as an independent entity. This independence is crucial because it allows the bank to make decisions without external interference. At the same time, the bank remains fully accountable to the public for how it performs its duties. As the apex financial institution of Sri Lanka, the CBSL carries out several key responsibilities. First, it issues currency and controls the national money supply through monetary policy operations. When the economy needs more liquidity, that means more cash, the CBSL can increase the money supply or reduce interest rates. Lower rates make borrowing cheaper, encouraging households and businesses to spend and invest, which helps boost the economy. Second, the CBSL is vital in setting policy interest rates. These policy rates directly influence how much banks charge for loans and how much they pay for deposits. For example, when the CBSL lowers interest rates, borrowing becomes more affordable, which stimulates economic growth. Third, the CBSL regulates licensed banks and other financial institutions. It makes sure they follow laws and rules that protect consumers and maintain financial stability. For instance, if a bank is making risky loans, the CBSL can step in with regulations to reduce those risks. Fourth, the CBSL acts as the lender of last resort. If a licensed commercial bank faces liquidity stress and struggles to meet its obligations, the CBSL can provide financial support. This function is critical for maintaining public confidence in the banking system. Finally, the CBSL also works on resolving failing financial institutions, regulating and supervising financial market infrastructure, and, very importantly, promoting the safety and soundness of individual financial institutions so that people's savings and the system as a whole remain secure. The Central Bank of Sri Lanka is an independent institution that plays a vital role in ensuring low and stable inflation, promoting financial security, supervising financial institutions, and since recently is playing the central role in educating Sri Lankans on financial literacy. Its ability to make independent decisions helps it respond effectively to changing economic conditions, ultimately benefiting all of us. Under the central bank's regulatory framework, several licensed and authorized institutions form the backbone of Sri Lanka's financial system. Now, let us have a quick look at them. Bear with me and listen carefully. 1. Licensed banks are the main pillar, including state-owned, private, and foreign banks. They provide savings, deposits, loans, trade finance, credit cards, remittances, and foreign exchange services. 2. Licensed finance companies, LFCs, offer higher deposit rates and flexible loans such as leasing, but carry higher risks as past failures have shown. 3. Registered leasing establishments focus mainly on leasing services. They allow people and businesses to use vehicles, machinery, and equipment without purchasing them outright. Leasing can be operational where ownership remains with the company, or financial where the asset eventually transfers to the user. 4. Licensed microfinance companies, LMFCs, serve low-income communities with small collateral-free loans and microinsurance. They cannot take deposits, relying instead on capital, borrowings, or donor funding. 5. Primary dealers in government securities buy treasury bills and bonds and sell them to investors, funding public projects and influencing interest rates. 6. Authorized dealers in foreign exchange, mainly banks, connect Sri Lanka to the global economy. They handle remittances, convert export earnings into rupees, and help students and businesses make international payments. 7. Authorized money changers provide currency exchange for travelers in airports, hotels, and tourist areas. 8. Authorized money brokers help banks and financial institutions manage their liquidity and foreign exchange risks. They don't interact directly with the public, but their role ensures that money moves efficiently between institutions, keeping the system stable. Finally, why does this matter to us? Taken together, these institutions form the backbone of Sri Lanka's regulated financial environment. They ensure money flows from savers to borrowers, from households to businesses, and from the domestic economy to the global stage. Even without realizing it, regulated financial institutions touch every part of our lives. In the next video, we will study about the financial institutions outside the direct regulation of the CBSL. Thank you for listening. See you in the next video.